Happy New Year, Simon, Hugo, everyone out there. 2021 in the books. WTI having trouble up here at this area. Thank you, Simon. Same to you. How are you? I don't know if Stel started here, but EG is putting in a nice reversal day. Look at the divergence.
And of course, I got stopped out at the low today. Isn't that great? That's Happy New Year to me.
It's a good way to end the year.
I know.
Anyway,
I knew it was coming down to that channel. There's a channel that we've been following, and I'm like, dang it. I didn't think it was going to happen, but it did, of course.
Well, there could be another chance. We could still make another push down towards it, don't you think, Blake? I mean, it's hard in this this environment to know whether or not to take reversal seriously.
Yeah, I mean, I should have prepared better for that. I should have had a wider stop for that. It was a small position anyway, because I'm just not trading big size, but it was just like, I kind of knew that was going to happen, but I stuck with it anyway. And it's like, because I don't like to adjust my stops away from where they're at. I like to keep them where they're at. So anyway.
Well, it's not a reversal week anyway. I mean, it's a reversal day, but not a week. So it's not like, a hugely strong signal as
True.
if So, look, we're going to have, how many days a week? 260 days to find trades in 2022.
Yep.
There'll be another one.
There'll be another one for sure. I'm not worried about it. It's just, I had to point that out and,
so that
like a lot of people don't like to admit when they're wrong, but look, I have trades that, go awry all the time.
Yeah,
so
that's what makes you authentic. A lot of people out there won't talk about it. They'll be revisionists. They'll forget about that recommendation or trade. So, we all go through this, a lot of the same struggles and the same struggles everyone else does, right the market, wrong the trade, that's one of them. So anyway, looking forward to 2022, Blake. I know you are. I know the whole dream team is, and we're going to kick some butt in 2022.
Yes.
Don't
same here, buddy. I'm gonna let you guys chat amongst yourselves. I'll be there in 1 second. All right.
Okay. Stel, are you around? Let me see who's here.
Good morning. I am.
Good morning. Happy New Year, buddy.
How are you doing?
Steve too. Happy New Year, Steve and Stel.
Hey guys.
Hey,
Grega.
Oh, Grega. I thought it was K-Man. Oh,
Yeah,
And Gaiman is here as well.
Okay. Hi, Grega. Happy
Hey.
New Year, brother.
Same to you. Thank you.
You too, K-Man.
Yeah, I think Blake just been done by the last bit of end of year flows in sterling, really.
Yeah. So you guys have any comments? Just jump in. End of the year. Why don't we just run through, Grega? What do you think some of the biggest themes will be for 2022?
Well, I think that we will face now some kind of a period of consolidation when looking at crude oil, which could be the first indication that we may be stepped into this period. I think that stocks will also try to slow down after this massive 2021 moves. As you know, I'm looking at the gold copper ratio, and I see this one at the extreme lows. So I'm thinking that maybe this economic activity will slow down a little bit, and this will certainly impact the stocks, which could stay sideways. But overall, I'm expecting and seeing opportunities on metals. I think that they have a very nice chance for a breakout next year. I also think that crypto market is possibly seeing a little bit more weakness early next year, but then there could be opportunities after this some reached 70, 80% of pullbacks.
I wanted to ask you, last time you were here, or the time before, you were showing stock indexes and you had two paths for it, either to start correcting from where it was when you were here or another new high, and you would end up with a ending diagonal. Did that happen?
Yeah, actually, I'm still looking. I can share.
Yeah, go ahead.
Yes, someone
And
has.
Stel, did you tiptoe into Euro pound today, yesterday?
My order is at 83.10, so I didn't get there.
Okay.
It's okay. It's okay.
You'll get it next month.
Yeah, someone has to stop screen sharing.
Oh, that'll be me, Greg. Yeah, go ahead.
Okay, so here I'm looking for an extended, this fifth wave. Obviously, I do not want to call any major top. I think that investment opportunities will occur after next big wave 4, but even for now, this extended lack of wave 5 of wave 3 is still incomplete. And as you said, I'm looking for two potential scenarios. And the first one is that we are here making a flat formation. You are now then in a wave B at a new high, expecting a drop or at least a pullback in at the start of next year. Keep in mind that wave 2 of the same degree was very simple, okay, very fast actually. So something that we should be aware of here is rule of alternation, where wave 4 could then be a little bit of more complex. So that's why I'm looking for potential flat formation here. Another interpretation which suggests potential limited upside is here an ending diagonal in wave 5 of 3. Even if we try to ignore the wave labeling from a basic technical analysis, you would look this as a wedge pattern, and again could threaten this this case for a reversal actually. So I'm thinking about the pullbacks, but again, period of consolidation for the next month or two, but overall we could then continue higher into a fifth wave.
Okay, appreciate that. Steve, big theme for 2022, buddy.
I agree almost on everything Greg has said, meaning
I always do.
Yeah, I'm looking for the year to be the year that I think we're going to have some kind of a major correction in indices, albeit it might be short-lived. I'm expecting that monetary metals at some point of the year are going to fly higher. I've explained in the past when I believe that's going to happen. That's going to happen when market expectations about the Fed's hawkish monetary path are going to be seriously disappointed. What else?
And you have levels for where you'd want to start getting out of the dollar and into other fiats.
Yeah, listen, that's a good question actually, because the dollar story is not as straightforward as the indices and metals story, because you might initially, for example, see metals moving higher against all fiat currencies, for example, right?
Okay, yeah.
Having said that, I do believe that at some point within the year, we're also going to see a major dollar high. It's just not necessarily the case that it's going to happen exactly at the same time that we're going to see metals starting to move to the upside. We might see a lag between these two events taking place. That's what
maybe the dollar likes higher yields if we were going to a 2% 10-year, and the gold also rallies because of yields rising and the fears of inflation. Is that what you're thinking?
In general, I have no doubt that real rates will remain deeply negative. Deeply negative. There's no question about it.
Yeah, even at 2%, they'd be negative what if yields got there?
They would be with current standard would be negative 5%. Real rates, and we have to use the word real. With being careful about it, because considering them real rates means that we also consider the 7% inflation indication real, which I've explained multiple times before why I think that inflation is seriously understated. In my opinion, I can't guesstimate the exact number, but I'm pretty sure that this year inflation was north of 10%, real inflation, actual inflation.
Okay. All right. So I know that Stel is looking for euro pound. He's interested in the euro for 2022. I'm in your camp, Stel. You have a level you're looking at for beginning to accumulate euros?
Yeah, I mean, euro pound.
Yeah.
I have my order in at 83.10 if it gets hit. And now the euro dollar is a little bit trickier. It might be. I think we may have one last push higher in the dollar. So I'm not running to sell euro dollars yet. But anything above something like 115, I'm going to be selling. Yeah, euro pound is the main one I'm looking at.
Wait. You said anything over what?
Sorry, what did I say?
I'm sorry. Oh, in dollar yen. No.
Sorry, I was looking at another thing. Sorry.
Okay.
No.
Because I'm going to pull up the dollar index here, so this way we can see it.
Sorry. I meant to say I was looking at the lows at 112. Sorry about that. What I missed. I said I was looking at something completely different. Anything around 112, I'm going to be buying, and 83.10 in euro pound, I'm going to be buying there. But the main thing I'm going to be looking at as well is going to be metals, just like Steve said.
Yeah.
You guys know I'm already a little bit long. I want to get a lot longer, and I do think that especially if we do get real rates staying negative, and if we do get any kind of disappointment from the Fed. Because remember, we're pricing quite a bit now for the Fed to do into 2022, and it's a big hurdle to actually deliver what they've promised. So taper ending by March, and then 3 rate hikes this year. I'm finding it.
You think it's really that much?
I do.
After 13 years of really loose monetary policy, is it really that much? I don't know. I don't know. But anyway, I hear what you're saying.
Yeah, you know what? I think they should have done more a lot sooner. The problem now is with they just can't afford rates to go a lot higher. As soon as 10-year yields start going higher from here, and risk assets start going low. We've seen this movie before. We've seen it in 2018. As soon as it happens, they're going to take a step back. And I think it's as simple as that.
So let me ask you guys this, and sorry, I was absent a little bit earlier. I was just kind of wrapping up a couple of things, and that I had to.
By the way, you're on the MetaTrader. We're looking at the MetaTrade screen.
No. You guys should be seeing my screen now.
Yeah, but
not the screen you want us to see.
Yeah, it's a MetaTrader screen.
What?
We're seeing your trading.
Your platform, Blake.
Yeah.
Oh, okay. Oh, let's see. New share this screen.
There you go.
Now.
Okay, got it. All right.
That's it.
All right. So, sorry, I'm just like totally like, what? What are you guys talking about? So here I was flipping between like the 10-year here and like, so what do you guys think as far as yields go?
Boy, they're taking their time. I thought we'd be, much closer to 2%.
We're clearly still trapped in a range.
Yeah. The market basically is not believing that the Fed's going to go through with it, or maybe not believing that the market thinks that the Fed might taper and hike, but it's going to be a policy error and they're going to have to reverse. That's probably what the market's thinking, right?
We have NFP next week.
I think the bond market in its own way is showing us the corner at which the Fed has boxed itself. I think what the bond market is telling us is that
it's a policy error.
There are no, the policy error has happened 13 years ago and they continue to do it. I've told you that before. What the bond market
Sorry,
is showing
Prof.
us is the following. The bond market is telling the following, that either they're going to try to go through with it, and that's going to cause a recession, and that on itself is going to cause them to go back to easing and everything else, and that will of course push yields lower, or that they won't go through with it. So basically the bond market is feeling comfortable at the moment, thinking that one way or another it's so not easy for the Fed to actually manage to lift real rates from here. I think that's what the bond market is telling us.
If I may add something, I think the bond market has been
managed,
slapped down because of the Fed until a month and a half ago was still adding $120 billion per month in the market. And you can hardly push rates a lot higher for as long as they were doing so much QE. That's just my 2 cents. And perhaps beginning of 2022, that's where we are going to see the rates take off as we get closer to March.
The thing is, what's going to happen if rates do take off? I think what's going to happen is a reversal of policy, and then back to, old QE and monetary easing again and again. I mean,
but that will depend on growth, right? If growth holds up, there is no problem for rates to go higher. If growth falters, I think the 2022 story is not going to be one of inflation. We know about inflation. It's going to be about growth. Is growth holding up? Yes or no? And that's where the yields are going to go, in my opinion.
Now that's a big discussion, Cayman, because I'm going to ask you the next question.
Go ahead.
How many years do you believe we've had with actual positive growth? Meaning, first of all, because we haven't had this discussion, the two of us, do you believe that inflation is what they report? For example, do you believe that inflation this year was 7% in the US?
No, but personally, if we go to the shops, we know exactly that inflation is a lot higher.
Exactly.
But that's not where the money creeps. The thing with the market, in my humble opinion, is that the market takes the money that is there and works with it. And at some point, the market anticipates. We always try to anticipate.
No, I understand. But my point is that
you have to work with the money that is available. And
yeah.
What I've been telling before, I still stand by it, is that there is going to be, in my opinion only, right, a moment where the QE is going to be small enough that we are going to cross some kind of a barrier where, because let's not forget how many billions or even trillions of dollars of new US debt has been created by all countries in the world. And I think there's going to be a point where they will say, like, oh, we are going to need to hedge it or fund it. And that's also where, for me, rates can hardly go lower from here. You know what that's what I'm trying to say.
Wait. You just said risk can hardly go lower from here.
Rates.
Oh, I'm sorry.
We're talking about interest rates, right?
Yeah, I know, but I thought something you said that it came out. Got it.
No, just the interest rates. I think it's hard to see them much lower, but where they really will go will really depend on growth, right?
Yeah, you know what the problem is, though, Cayman. If you asked me a year ago, like 1.5 years ago, can real rates actually go to -6-7%? I would tell you, no way.
Yeah, and are not trading there, right? The tips are not trading there.
If the tips aren't trading there, no, they aren't.
No, the tips on the 10-year is -1.15%.
Yeah, but in my opinion, that's the market that has broken the most. I mean, let me be very clear. Do you think there is even a single investor out there that is buying tips because they actually believe that they're inflation protected by doing so? I think that tips really...
Yeah, retail people probably believe that.
But you have to compare comparable things as well. I mean, if you compare tips to European real rates, are you putting your money in euros instead of dollars? I mean, it's a question that probably for us, since we don't see the investors' books, is a bit tough to answer, right?
Yeah, I'm not sure that real investors are doing much of the trading anymore in these instruments. I think that the vast majority of it is either central bank related or big pension funds that need to have like some assets in their portfolio that are deemed like super safe, plus some hedges, etc. So do I really think there are still investors out there that say, okay, let me put some of my money in tips, for example, and wait until maturity? I think practically nobody anymore.
Yeah, it's possible. But anyway, I mean, for me, we are in ranges in let's go back to, if we go back to yields, we're in ranges. I think the 10-year is 140, 170, and then we will see what happens.
It is indeed a range.
I mean, so let me ask you this, you guys, this bottom line, and I almost said something I shouldn't have said. Forget the debate for a second. Around the board, what do you guys think going into 2022? Are rates going higher or lower from here? Now, I think, K-Man, you just answered the question saying that you can't see rates going any lower than they currently are. But you lived in Japan for a long time. So are rates going to be here or lower, or are they going to be higher in 2022? What do you guys think?
I think it's a threefold year next year. That's my feeling for 2022. I think rates will tick up into the end of the QE come March, and then we will see where growth is, and then the Fed will decide whether to hike rates or not, and then the year goes on, and growth will direct where yields are going to go. Same as for me personally, where the dollar is going to go.
I kind of agree with you.
If you ask me, for instance, based on the 10 years, which is the instrument the Japanese use, if you ask me, is dollar yen trading 110 based on yields or 120 based on yields in the first quarter 2022, I will say 120.
Yeah, you guys are too wishy-washy for me. All right.
Bigger move. Still at 115.10, right?
As far as growth next year, I was talking to a guy yesterday who isn't worried about the Fed. He's more worried about China lockdowns, because they locked down that one city, 13 million semiconductors produced there. And if they're not going to let this thing flow through the population, kind of like we are, where we'll let people out after 5 days, which, and Blake, you said it, that I think your mother-in-law or stepmother-in-law said it was RN 24 or something, and
no, it's an R10. It's R10, but that means it's going to make its way around whether you like it or not. You're going to get some sort of whatever.
China doesn't want to let that happen, so they're locking down. So they're taking a different approach.
You're right, but who knows what the Chinese government, if they, is going to do, especially if they realize it's not just that, it's not as deadly as the original COVID. But I don't know. I think that is a risk. I think that's something that we have to be watching. I'd agree with you, Dale, but I don't know. I think the market's pretty much over COVID at this point. I think the big mover for 2022, guys, is going to be, the market's trying to grapple with the end of the Fed, easing and raising rates. And I think that's going to be the big story of next year, which is going to create a lot of volatility in equities. Any which way we slice it, I think we are going to start to see some big swings in stocks. Look, in the way, one of the ways you can look at this is really, really simple. And I'm going to actually take us over to a weekly chart. I'm going to go to a different chart on the S&P. So here's the S&P. Let me go over to the weekly chart really quick. And I think this is probably the better chart to look at.
Yeah, I'm just starting to get bullish stocks up here.
Yeah. So what I'm trying to point out is the 200 period moving average. The 200 period moving average, the reason why it's so universally used amongst investors and traders is it's the revision to the mean. So whether you go to, a weekly chart or a daily chart, it's how far away from the mean. And this is unprecedented. Look, guys, I've been in the market for 25 years, and you talk to somebody like K-Man, been in the market, what, K-Man, 30 years? Stelios, I know he's been around as long as I have. I'm sorry, how long? 40. Dale's been in the market for 900 years. I mean, we are all, you don't
Dale
get
created
this,
the market.
Yeah, you were there when it was actually founded, the markets.
Yeah.
You get these
I was on
expansionary
4th and
periods.
Wall. Yeah.
Like if you look, and obviously, guys, I'm just joking here. You get these elongated periods above like the 200-day moving average for years on end. Look at the explosion here, and you guys, I know everybody says this, it's all because of the Fed, but it is. I mean, it is. I mean, COVID was just a small blip, and an otherwise an excuse for the Fed to just really put on some really crazy support for equities and the global economy and yada yada yada, and that just further the fuel of what was already happening since post GFC. So this expansionary period, I think, is going to be really turbulent going into 2022, right? And it's not that if you're sitting here looking at equities and going, oh, we're going to go straight down here. I don't necessarily agree with that. I don't agree with that. What I think is going to happen is, we are going to be dealing with how the markets can swallow not having this excessive monetary policy coming, into the market at all times. And I think it is going to create volatility. And, I think that's going to be the theme of this next year. We're seeing every central bank tighten, and the markets are going to have to deal with it. And it's not just, and I know, you look at the E-mini futures, or this is the S&P rather, it's a better way, in my opinion, to look at the S&P just kind of on a broad, longer term scale. You can see how far away from the mean we are. That doesn't mean that the markets are going straight down. I think that we're going to catch up to this 200 period moving average one way or the other. So you're going to see this gap close like it, you could probably look at any point in history, any point going back further than 1998 that I have here. But, at some point we're going to meet up with this 200 period moving average, whether it's back at 4,000, whether it's down here at 3,200, and we're probably going to at some point trade back below it, at some, point here in the next couple of years. I'm obviously looking at a weekly chart, but I think that's what we are going to be dealing with, is a very, very, very volatile year, which is going to be good for us as traders, right?
Can you just believe it, Blake, looking at this chart, that peak at 99, 2000 was unanimously acknowledged as a bubble? And then look at the, just put this in context.
Let's, if I can get the spiders, probably be, I don't even know if that's going to give us enough data. There it is.
That was unanimously acknowledged post-event as a bubble. And now look at this chart.
Yeah, well, if you adjust that by the change in money supply, then you'll see that top is probably still the highest top ever. Right.
Yeah. There you go. That's a good way to think about it, Stelios. But we were just having a conversation with, I was just having a conversation with Chi. He has been a long time. He was in our chat rooms before we even back on with MB Trading, I think. And I met up with him in New York a few years ago with some other ForexAnalytix traders. We all met for some beers. It was really awesome. And he opened a restaurant out in New Jersey. and where he lives. So he trades, not as much as he used to, but he opened his restaurant last year. Anyway, we were just talking about NFTs, and he had one of his friends that just made his first six figure profit on NFTs. That to me, that's a world that really is a little crazy to me, because
he's a gambler who did well. Well done to him.
No, it's well, yeah, but more importantly about the whole NFT crypto space is that the money that's being seen and made, and it's very reminiscent of the .com bubble. It really is to me, and I'm a very, very firm believer. And I know we've had this big conversation that a lot of this stuff is just not going to be here in a couple of years. Now, I truly do believe in crypto, in the crypto space, and I believe in the and blockchain, and I actually do believe in NFTs to a certain extent. I do think there's value there. If you have kids that play the video games like Roadblocks, it's not Roadblock, it's Roblox, Roblox or Minecraft. Like my kids have bought and sold things with real money in those virtual worlds. So I do believe there is some intrinsic value in there somehow. But my case is, my case is I eat, I live, I poop, I fudgesicle in this world, right? That happens in the real world. And so you can say, oh, but in years, in 20, 30 years, kids are going to value their Nike Air Jordans that they buy on their Roblox blocky people online more than the real Air Jordans that they have on their feet in real life. I guess you can argue that point. I just disagree, but I do think there's value there. I just think it's a little excessive right now, and that's just an opinion. But you go ahead.
I was just going to say one thing. I think everything we own in the future is going to be done via NFTs, your house, your car, everything, because it's such I'm not an expert, but I've read a little bit on it, and it's an amazing way to attribute ownership, basically, and it's unique, and it's fantastic. So I'm all for NFTs, but I don't get why an ape should be changing hands at 17 million. So I'm all for blockchain, but I don't get why Bitcoin should have any value. So basically, that's the thing.
So basically what Stel says is that NFTs will be a great vehicle to attribute intrinsic value items electronically. But anything that is based on thin air, just because it's called an NFT, is probably going to zero.
I tell you what.
Or it's going to lose a significant amount of its value. And that's the thing about the technology behind what we're seeing. Is I think that the technology is amazing, and I was just making this case with I had dinner last night with my two nephews who are in their early 20s, both very intelligent, and then my brother-in-law. We went out and met up because my brother-in-law is having him and my sister are having another kid, so he wanted to go out and have a drink and some food before he was personally on lockdown for a couple of years. You guys know that as parents. And we were having this conversation last night, and we were talking about I'm like, look, I haven't carried cash on me in years, like literally in years. And the only time I ever have cash on me is because it was given to me randomly for whatever reason. I just don't carry everything. Everything is going digital. It is. Yeah, we are going into a digital world, and that's a fact. So, blockchain and the technology behind it is, I believe it is the future of monetary, transactions. But it's just like the internet. I believe everybody's, going to have, I believed everybody's going to have the internet. And we found out that Earthlink and Mindspring were not the end all be all ISPs in the world. And those stocks that were, worth whatever they're worth eventually were bought out or, went to zero. So, there's going to be consolidation in the space, I guess is what we should say. But I do believe the technology is here to stay. So I just needed to get that out.
Absolutely.
Yeah. So anyway, it's a really interesting, it's going to be an interesting time going into 2022. And I have to say that, if you guys are, if you're listening in today, we do have probably one of the, most active communities in the markets. This is like our general chat room. You guys can see, just, all the, we were talking about NFTs. There's that very expensive NFT. Oh, what? And he, this is what Chi was saying. He goes, yeah, my buddy is involved and these are NFTs. And he goes, I just copy and pasted it. It still looks the same to me, which is true, right? It is true.
And you know what's the funny part, Blake, is that if somebody stood at a very popular road and had this thing painted and was selling it to people that were passing through, I doubt everybody would bid it more than $20, right?
Yeah.
And we're talking about the physical thing that actually has some intrinsic value. It's something that somebody painted and you have it on a piece of paper so you can actually claim a real ownership to it. And now for some reason, somebody puts this which if you ask me, I don't see the appeal in it, even as a, as a design or as a, art, right? I think it's something that I could think of my son drawing at the age of 15.
Yeah.
And just because it's an NFT, somebody will attribute to it a very, very high price. There is no chance that this thing isn't going to zero.
So and thanks, Steve. What I wanted to say is 2022 is going to be a really, really great year. And the best community to be in is going to be the ForexAnalytix community. So you guys make sure that you're, those are the chat rooms that I was trying to show you, that you can see right here. All the chat rooms, the trade rooms, the, Spanish chat room, the news and research rooms. We have one of the most active communities in the FX market. Come join us. It's $1 for 10 days to try it out. Our pricing does increase in about a week or so. We're going to be putting up the new, it's the pricing that we do once a year. And you guys will be able to get a steep discount, but we don't offer a trial during that. So make sure you guys take advantage of it. But guys, I want to say I'm looking forward to 2022. First, personally, I am myself. We've been in a very low volatility environment in currencies for years. And the reason why we've been in such a low volatility environment for years is because central banks have been at zero for years. I didn't want to believe when I said it like 5 or 6 years ago on the morning edge and everything else, when I said every central bank is going to basically go to zero. Everybody's rates are going to go to zero. I didn't really want to believe my own words, but I truly believed that was going to happen. Well, it did happen, and rates went to as low as any central bank, every central bank could possibly bring them to. And we stayed there for a very long period of time. Now we have an inflation issue. Now rates are moving. Expectations are moving for rates to go higher globally. This is only going to create volatility for markets. And you guys are all in the right spot. So we'll be seeing you every single morning in 2022 on the F.A.C.E webinar right here. So I'm excited for it. And I just wanted to make sure I got that message out. And I want to thank everybody that has really supported us over the last 5 years, who've been here, whether you've been a client, which you'll eventually be at some point, or you haven't. Thanks for just the retweets. Thanks for, sharing us on LinkedIn. Thanks for being with us live every morning, the days that you can. We appreciate your involvement in our community. I know I do, and I'm sure I can speak on behalf of everybody else. So thank you guys so much for making us who we are.
So don't quit your daydream. Work with the dream team.
Nice. A very happy new year, everybody.
Happy New Year.
Wait, I have somebody here. Ella.
Is it Jason?
Έλα, πες. Πες.
Maybe not.
Jason.
Έλα, πες.
Happy New Year.
Yeah.
Very nice.
Thank you, Jason.
All right, everybody.
Wow, he speaks pretty good English, better than you,
Yeah.
Steve. That's great.
Yeah,
Yeah,
he
absolutely.
didn't say Happy New Year.
Yeah.
Well,
Happy New Year, comrades. See you in 2022.
all right,
Hey,
guys.
guys.
Well, happy New Year to everybody listening in, and we look forward to seeing you. Remember, we won't be here on Monday. That's for whatever reason an observed holiday. However, I'm going to say this. I know I've said that a couple of times the last week. In the event that some crazy crap goes down over the weekend, there's a big default and some sovereign
Lehman Brothers
bond
defaults
somewhere.
again.
we'll light up these Zoom meetings, and we will go live, and we'll let everybody know via social media. And if you use ForexAnalytix, you'll be getting these bell notifications. Your app will be ringing off the hook. We will go live if there's something we really need to cover. But other than that, you guys have a great and happy New Year. Dale, thanks for all the great interviews this year.
Oh, thanks, Blake. I think it's close to 1,000 now.
Woo!
Yeah, actually, yeah.
Yeah.
Well, I think you should spend the
Luke
next 3 or 4 hours going through our YouTube channel and going back and counting
Counting them.
every one that we've done.
All right.
Wait a second. I think we
That'll take you a few
started-
hours.
I think we
Yeah.
started spring of 2006. Was it 16?
Yeah. 4.5
Yeah.
years. Yeah.
Yeah. So 4.5 years, let's say, I'm assuming we're doing
4 a
we
week.
Are we doing like a couple of hundred per year?
Yeah, I had to go pull up the information that I filed with the IRS. Had to go find the original creation document, and it was for 2015 when basically conceptualized ForexAnalytix. So thanks, guys, for all these years, and we're glad you could be a part of it, all of you.
Okay,
It's our
guys.
pleasure.
So a happy New Year, everyone. Remember, this is a good time to be reflective and be with the people you love and tell them how you feel about them. They're not mind readers, and recharge your battery and go over look at monthly charts this weekend. That's your homework assignment, monthlies and weeklies, and have your biases ready for 2022. And that's a wrap. Don't just count your pips, count your blessings. Adios, everyone.
It's a great recommendation. Everybody go take a look at those monthly charts. Great idea, Dale. Happy New Year, everyone.
Happy New Year, Blake.
Happy
Team.
New Year.
Happy New Year.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.